It's a new year, and there's no better time to take control of your trading. Keep watching. We're going to go step by step, creating a trading plan that will set you up for success and help you take your trading to the next level. What's up, guys? It's Brandon from Amphibian Trading, and today we are going to be talking about how to create a successful trading plan. Over the next 4 weeks, we'll be discussing and laying the foundation for your plan. We'll start by going over what a trading plan is, why it's important to have one, and we'll even get started working on the first two components of our trading plan in this video. But first, go ahead, hit that like and subscribe button so you can follow along week to week and don't miss any of the steps. So let's start by going over what a trading plan is. Just like a business plan, a trading plan helps you to make more informed and confident decisions. It provides a framework for entry and exits, managing risk, when to trade, and other rules to help you run a profitable trading business. By creating a trading plan and following a set of predetermined rules, you can avoid getting swayed by your emotions or reacting impulsively to market movements or giving into FOMO. Everything about your trading will be based on rules that you create that align with your personality and your goals. Now, before we start building our trading plan, let's take a look at the 8 components that will make up our trading plan, and then we'll discuss some tips to help you work through it. So here is what we are going to include in our trading plan. First, what are your trading goals? What type of markets and instruments will you trade? Entry and exit rules, risk management rules, market direction and timing rules, routines, resources, and then lastly, miscellaneous rules. Now, I know that's a lot of stuff to cover, but this doesn't have to be a daunting task, so here are some tips to consider when building out your plan. Okay, first tip, keep things simple. Don't overcomplicate your rules. Your rules need to be something you can consistently and easily follow. Second, be patient. Building your trading plan, it's not going to happen overnight. That's why I've spaced this out over the span of 4 weeks so that there's plenty of time to really think about each section carefully and make sure your rules are sound. Third, stay disciplined. Once you have your rules in place, it's important to stick with them and avoid making exceptions. And lastly, be open to adjustments. As you work through your trading plan and you do your post-trade analysis, you may find certain aspects of your rules are not as effective as you thought and may not be that beneficial to your performance after all. Alright, so now that we've gone over what to include in our trading plan and some tips to help make this task easier, let's get started with the first 2 sections. There's a link in the description for a trading plan template you can use to follow along and create your plan. If you don't want to use that, go ahead and open up a new Word document or grab a pen and paper and let's get started. First thing that we are going to do is define our trading goals, and then we'll identify the markets and the type of instruments we're going to trade. Now, when you're thinking about your trading goals, it's important to have a clear understanding of what you hope to achieve, and at the same time, be very realistic about your goals, as this will help you to determine the type of investments that align with your objectives and your risk profile. Now, your goals might include something like maximizing returns, minimizing losses, or achieving a certain level of income or profit. For example, you could say, my goal is to outperform the S&P 500 while maximizing returns and keeping my drawdowns limited to within 15% of my equity curve highs. So in that example, that is a very clear and well-defined goal. Now, with that goal in mind, your next step is to decide what instruments you will trade to make that happen. Depending on what you write down as your goal, you might choose to trade stocks, could be bonds, mutual funds, exchange-traded funds, or options. So building on that previous example, the next section might look something like this. I will primarily trade growth stocks showing strong technical action that also meet the fundamental criteria of CAN SLIM. I will use options as a way to hedge and generate income by selling covered calls. So as you can see, we've clearly defined that we will trade growth stocks and options in the form of covered calls to help us achieve our goal of outperforming the S&P 500 while keeping our drawdowns to within 15% of our equity curve high. So at this point, we've clearly defined what our goal is and what instruments we'll trade to achieve that goal. Take your time and really think about those first 2 sections, and then next week, we'll keep building and we'll dive into our entry and our exit rules. Thank you for watching, and if you enjoyed this video or found any of the information useful, go ahead, hit that like and subscribe button, and keep following along next week.